Me. Well, it's 7 o'clock, and so I guess we'll get this party started. And I think we'll go with Dr. Welch this morning. And for all who are on, thank you for joining us early this morning. If you have any questions, as usual, just type them in the chat, and we'll do our best to get them answered. As anyone that's on here is we're talking weather, so I'm sure Dr. Welch is going to have some of that great news as well. So with that, I'll turn it over to Dr. Welch.
Sounds good. Appreciate being here today. See, if I don't see my share screen enabled right now.
Oh, hold on just a second.
Yeah, get me on there, and then we'll see if I can bring that presentation up, and we'll get rolling.
Try it now.
All right, there we go. And from the beginning, and let's see, are you seeing that okay there now? And we're looking at U.S. corn planting progress.
No, don't see it yet.
Oh,
all right, let's see. How about now?
no.
No,
Not yet.
I have even lost my ability to share. Let's see.
Oh, I'm sorry. I was trying to get ahead.
All right, well, we'll get this worked out here. Hang on just a second. Let me move this over here. All right, let's try one more time. And let's try now.
Yes, sir.
There we go. There it goes. You got
Let's
it.
do that from the beginning. You know, this is a year obviously with tight stocks and very high prices. I appreciate this comment from a market analyst out in Indiana. He said, this is a year that we can't lose acres and we can't lose yield. Well, we've got this corn crop going across primarily up in the Corn Belt. We are looking at the prospects of losing both. You know, we thought maybe if we get the crop in early, maybe we would bump up a few acres. If we get it in early, that enhances the yield potential this year's crop. Well, you can see by this light blue line that we're running below normal this year by about a week in terms of getting the corn crop planted. The black line would be the normal pace. The green line is the all-time record fast pace for getting the corn crop planted, which by last Sunday would have been 90% of the crop. The all-time record slowest pace is down here in this red line, which was just about 25% back in about 2019. So we're off the record low, but we are significantly behind normal if you look at many of our major corn producing areas. The ones that are above normal are North Carolina and Texas. You look here, Tennessee is right at normal, Pennsylvania is at normal, but the northern and western part of the Corn Belt, here's North Dakota, here's Minnesota, here's Iowa, here's Wisconsin. You know, these areas were hot and dry a year ago, and we got the crop in early. It's wet and cold this year. And so certainly the farmers are on a slower pace getting the crop planted. And so that's raising questions about what the final acreage is going to be, as well as, you know, what that's going to do to yield potential. Looking at the winter wheat crop, we're certainly looking at some of the poorest crop condition ratings that we've seen back going to 1996. Our average index values, this little dotted line up here, we would be looking at an index value starting out at about 360 and then maybe decline down to about a 330 by the end of the season. Well, we started below 330 and we've drifted down now to an index value about 265. Again, that rate's about where we were in 1996 when the crop made 37 bushels to the acre. Trend line yield for winter wheat would be about 50 bushels. You can put that in perspective. There's that 1996 crop. USDA is currently projecting the winter wheat crop at about 47. That's probably a little high given the decline in conditions that we're continuing to see as we reach the end of the season. So certainly some very difficult conditions out there in winter wheat country. Price response. These are the all-time record high, low, and closing prices of the December corn contract going back to 1980. The record highs in that contract were 2008. Then we broke it again in 2012 at $8.40 a bushel. So far, we've seen that 22 contract trade at $7.70 a bushel. So we're pushing that $8 level. But I think it's interesting to note that from a marketing perspective, We've never seen that December corn contract, even though we've traded higher than where we are right now. We've never closed above these levels. In fact, the highest close on that contract would be 719. So there's likely to be some pullback in these prices. Even at these record high levels, we've never closed at these levels. Wheat is a little more dramatic. The record high previously was a $13 a bushel bid back in 2008. We have broken that now with the July 22 contract, trading that up at over $13.80 a bushel. The market closed yesterday at $13.68. So we're breaking all-time record highs, and there's a fundamental reason for that. I mean, we'll touch on that here in just a second. But look at the highest close we've ever seen on July wheat. That contract has never closed above $8.45. Now, I sure think we're poised to do that this year. But again, I just think that puts into perspective these excellent pricing opportunities that these markets are offering. And even look at it, if you don't have a 22 crop, what's that 23 marketing potential look like? We're at over $12 a bushel on the 23 contract. So certainly I think that's something that ought to have our marketing attention. Of course, we're seeing continuing fighting in Ukraine from that invasion from Russia over here in the eastern part of the country, this Donbass region, which crosses over these provinces of Luhansk and Donetsk. And of course, we've been fighting in these shaded areas since 2014. Russian separatists have been fighting the Ukrainian army there for 8 years. But now it appears that Russia is trying to expand its control of this region, the entire Donbass, and perhaps all the way down here to Crimea, what they call a land bridge, connecting their separatist controlled areas all the way to the area that they captured in 2014. The steel plant in Mariupol, right where these roads converge right here, of course, has just recently fallen. And again, that would further entrench the Russian control over that Black Sea region, again, from the Donbass region all the way to Crimea. That matters a lot for wheat. If you look again, here's the fighting in the east down to Crimea, encompasses quite a bit of the wheat production area of Ukraine, particularly on the eastern half of the country. Corn, not so much. As they moved away from fighting in the northern part of the country, that opened up perhaps much of the planting possibilities for their spring crops. Now they still got to move it, still have to get it out of the field and put it somewhere, and hopefully be able to export some of that. But at least it does open up some production possibilities for spring crops, even while much of the wheat production area is still at a very high threat, given the fighting of the war. USDA's update in the May WASDE, looking at stocks to use carryover in the wheat market. And I think this explains why we're breaking those all-time record high prices that we set in 2007, 2008. World stocks to use measured by days of use on hand at the end of the marketing year continue to decline. That's the orange bars. They're down another 5 days for the new marketing year. The lowest is 2014-15. So I have to go back over here somewhere. In the US, we're down another 4 days. The lowest is 2013-14. For world, take China out of the equation. China is purportedly holding about 2/3 of the world wheat crop that's in storage. You take China out of the equation, the world less China declined by 7 days in terms of its carryover estimate, and that would be the tightest carryover since 2007, 2008. So fundamentally, it would make sense that we would trade in prices that we last saw at that level. Now, you look at corn, it's a little bit of a different picture. World days of use on hand, about flat going into the new marketing year. If you look at the world less China, we're actually seeing some degree of an increase as we go from year to year, a 2-day increase in that carryover supply. If you look at the US days of use on hand, down about a day, but again, above where we were in 2013, 2012, 2011, the last time we saw record high prices. So it puts, again, a little context, I think, on where the prices are trading. Longer term, there will be a supply and a demand response to these high prices and to this short crop situation. Now, the short crop is driven by a military action, but it's still a short crop. It's just as would be a weather incident. When we see short crops, use goes down. This is world per capita grain use. There's a short crop in 2012. There's a global short crop in 2014-15. Grain use will go down in response to these high prices. What about the supply response? We've seen higher commodity prices the last 2 years. Commodity supply will increase in this high price environment. These are harvested acres. If you look at North America, South America, and East Asia, which is primarily China, over the last 3 years, and then the change, if you go back to 2020, when we first started to see this rapid increase in commodity prices. In North America, we're up some 3 million hectares, some 9 million hectares in South America, and some 725,000 hectares in East Asia. Put that in acres, add those together, that's 32 million acres that have come into production over the last several years. Stats Canada, their prospective plantings report, this is for wheat. They're expecting an increase in area harvested of 6%. If they just get to trend line yield this year after a very disappointing crop last year, a 35% increase, production could be up in Canada 44%, exports 39%. If Canada just makes a crop and increases their exports back to where they would be in a normal level, that would make up for losing half of Ukraine with just Canada coming back online with a normal crop. So we would look for some impact on the consumption side of the balance sheet, as well as on the production side, longer term, as long as weather and obviously the accessibility and affordability of resources would support that growth in production. Farmers will respond to these high prices as soon as Mother Nature and those resources will allow. So where are the prices going from here? I think it's good to be reminded what you learned back in Econ 101. Lord Alfred Marshall told us in 1890 where these prices were going. They're going to go to the cost of production. Now, maybe that means the cost of production will come up to where prices are. Maybe it's not prices falling back to the cost of production, but you know that over the longer term, that's where we're headed, whether we stay at this price level where we are or not. So what does that mean then? If that is true, if prices are going to the cost of production, we need to get our cost under control. And obviously in this high input cost environment, that's absolutely critical. That's preaching to the choir. I know in terms of being efficient with every penny that you spend out there, but we've got to keep our cost under control. And then do you recognize a profitable price when you see it? And if you do recognize that, do you have the resources and the communication and the tools in place to lock in that price and do something about it? Put a price floor up under these prices. And again, maybe the production possibilities for 22, maybe that doesn't look very feasible under the current production environment. I get it. What about 23? With our crop insurance programs, a combination of melding and merging the risk management that brings to us, what kind of marketing plan can we still put together? Again, recognizing these high price opportunities will not last forever, and there's some real possibilities out there, even with high input costs. So that's what I brought to share today. Appreciate being with y'all, and certainly glad to take any questions, and I'll be glad to see what other folks have to say here this morning. Thank you.
Dr. Welch, I have a question. What happened with India and the wheat market?
India was that was going to be our saving grace in the wheat market this year, in that they were expected to have another one of their record wheat crops. They've had 4 or 5 in a row, and become a significant wheat exporter. Well, like we've been talking about, the weather here in Texas and the rolling plains, it got hot and it got dry just as their wheat crop was maturing. Now USDA did downgrade their production, but still we're up in record high territory according to USDA's post. Now, whether the Ministry of Agriculture have other information, we'll see how that plays out. But my understanding is that when then India announced a ban on wheat exports, and obviously the wheat market reacted, going limit up Monday when that news came out. However, that did not ban current sales. That did not ban private wheat shippers. It was a government ban from exporting wheat. So in terms of India's wheat reserves that are held privately versus that are held, say, in their a federal or a governmental reserve system, I don't know. So I think that's kind of the question playing out is, the headline, India bans wheat exports. Whoa, we were really counting on that wheat, especially if you think about where they're located. Gosh, if Russia and Ukraine were supplying wheat to North Africa and to the Middle East, India is poised geographically just to step right into those markets. what a difference that would make. And then to see that headline, but I think it's going to take some time for that really to play out from two reasons. One is just who does that apply to and what wheat are we talking about? And then just how bad are their production prospects? They're cutting wheat right now. And so it'll be interesting to see just exactly what that wheat's able to make.
Right.
So yeah, it was a shock, but I think it's going to take some time for it to play out to see what it really means.
The cotton market was limit up, and everybody said it was wheat's fault.
On that, yeah. And
Bob, I'm sorry, Mark.
No.
Bob, I can't share my screen. It says it's disabled. That the host disabled it.
You're gonna have to make him a co-host, Bob. He's
Just
not a
is.
co-host.
He should be able to.
It says host disabled participant screen sharing, whatever that means.
I'm giving you co-host.
There we go. Okay, you did it.
There it is. Yep, we see it.
Okay, let me make that full. There we go. Okay. So like grains, but a little bit uniquely, cotton has been on its own march to high prices. So I have in this chart here, the blue line is the old crop futures price, the July ICE futures, and the red line is the new crop December ICE futures. And you can see the rather dramatic pattern that's been going on for a while now, for the last year and more. And there's the point I want to make with this is that there's somewhat different reasons from year to year to explain what's been happening. The old crop, last year's situation was caught up in kind of getting over the pandemic and the economic effects of the pandemic, and that gave a lift, even though we haven't solved all those supply chain problems. It gave a lift to demand. There was a lot of demand, a lot of export sales of U.S. cotton, and that definitely lifted our market. So that was part of that story. Last year we started off dry, and then we were going to be late, and then we ended up making a good crop. But for a while there, it was kind of sketchy about what the production would be, and so there was a lot of speculative buying. I think that's what pushed us over $1 to begin with, and what's kept old crop prices in the stratosphere up to $1.40, $1.50 range and held them up there is something called mill fixation buying, which is basically just mills finalizing all these export sales contracts that they got into. They're buying futures when they take delivery of that cotton, and that's still going on, and that's why old crop prices are as high as they are. That effect is going to fade, when all the cotton gets delivered and the mills finalize all those contracts. Then pretty much the July will be over at that point. But so the red line, the new crop futures prices are, they're up for somewhat similar reasons. There's also expectations of a sketchy short crop because it's dry. And there's been speculative buying, but it's much more focused on the drought question, on the production question, how much abandonment we'll have. And we really don't know the answer to that question. There's the obligatory drought map, and it's bad. If you look just at the supply and demand numbers here, the old crop supply and demand numbers are summarized here in the middle column, and the ending stocks of 3 point something is tight. It's not the tightest in history, and it probably wouldn't justify $1.50 futures. All those other things, the mill fixations particularly, are playing into ratchet up prices. But it still paints a tight situation. If you look at the new crop, we're even tighter situation, an even tighter outcome, under 3 million bales of ending stocks. That's tight, but it's what's keeping prices lifted and will continue to do so at least till about August or September, is the fact that there's so much uncertainty around these supply and demand numbers, particularly on the supply side. So, You know, right now USDA is going with a milestone guesstimate of planting over 12 million acres. We're going to get another planted acreage report at the end of June. And if I had to guess, I would say that planted acreage number is going to go up. But I would also guess that the harvested acres probably will not go up. That is to say, abandonment will probably be pretty high. Right now, they're assuming 25% national average abandonment. It could be 30 or 35 before it's all said and done. So there's just a whole lot of uncertainty about how much cotton we're going to have out there in the country because of just this basic question: what's been planted? So the milestones to keep in mind then are that what the market's going to be anticipating and reacting to are this planted acreage report coming up, and then there'll be 3 or 4 certified acres reports by USDA FSA that'll clarify how many acres failed and how many acres were planted. And so that may come into play here to add to this number. So a lot of folks will be watching these things. The speculators will, the merchants will, the traders will, and we'll have to as well. Then of course we have monthly supply and demand reports. We had an influential one come out a week ago. In cotton, the ones that matter the most to us in South Texas, USDA comes in and puts boots on the ground with field sampling in South Texas starting in August. They do it again in September and every month through December. So those monthly supply and demand updates are going to also be critically watched. And then when Jennings data starts to come in, that'll sort of clear up the picture a little bit too. So all this stuff will matter. It always matters, but this year's a dry year, so there's more questions. So these milestones will matter more. On the demand side, I'll just say one thing. USDA is forecasting 14.5 million bales of exports. And I'll just say, I hope that's not too optimistic, because, you know, if you think last year demand was recovering, we were coming out of a pandemic. This year, we're entering into a new kind of economic crunch that could affect consumers related to inflation, stagflation, you know, consumers having to pay more for gasoline and more for food, your typical kind of recessionary situation. What we know happens in those situations is that we cut back on discretionary semi-durable purchases like apparel. We tend to cut back on. So we'll have to see how that affects the demand for cotton. Hopefully we'll still export that much. But anyway, it's all sizing up to a very tight situation. And that's where I'll leave it. Bob and Matt, I'll hand it back to y'all.
Thank you, Dr. Robinson. We greatly appreciate the information and you being with us this morning. So moving on with our program, I don't see anything in the chat or any questions. We'll move on. And this morning we have Christi Short with us. She is the Regional Communication Manager for the Cotton Board, and look forward to hearing what she has to tell us about what's going on with the Cotton Board.
Good morning. Thank you guys for having me on. Bobby, would you mind making me a co-host so I can share my screen?
Sorry.
With you? That's okay.
We can see your screen and
All right.
presentation. There you go.
There we go. Well, thank you guys again for having me this morning. I'm going to kind of focus on a few things here now that we're right in the middle of the second quarter of the year. A couple things that Cotton Incorporated and the Cotton Board's been working on this year. So just as a reminder, we're a trio of organizations here at the Cotton Board. We're the group that brings in the assessment dollars. Cotton Incorporated is the group that actually carries out the research and marketing on behalf of U.S. cotton growers. So my job is to communicate what the program's doing back to stakeholders. So it's really exciting to be able to share a few things that I have with us this morning. As you can see, this is kind of just a historical chart of where we've been with investment in the research and promotion program. You can see a large uptick in the program there when we started collecting an assessment from importers as well. So the cotton content of imported goods back into the United States. In 2021, we were able to fund Cotton Incorporated at the highest level that we've had so far, $87 million that goes directly into the consumer marketing, the on-farm, the in-mill, and the in-lab research. So I'm going to talk about some of that funding that we're doing throughout 2022. Every year, the Cotton Incorporated boards and the Cotton Board meets to determine the budget for the upcoming year, but also what the primary focus areas are going to be for 2022. So I have on the screen these 4 areas, and these are going to be what every department at Cotton Incorporated really kind of focuses their research, their priorities, and their departmental goals around. So of course, no surprise, hopefully to some of you, that a couple of the things that are on this list, but we've seen for years now, supply chain transparency, traceability of cotton kind of be top of mind issues for both brands, retailers, and also the consumers. Wanting to make sure that we keep U.S. cotton in the market. We want to make sure there's always an opportunity. We don't lose that opportunity for U.S. cotton in that supply chain transparency space. Kind of in the same vein, sustainability is an area that's been a topic of conversation for years. I'd say we probably have had a lot more emphasis in the last maybe year or two on sustainability, really a push from the consumers. Consumers are really, really interested in knowing where their food, clothes, fiber, all of their materials come from, how they're grown. And I think U.S. cotton has a fabulous story to tell, We just need to make sure that we tell it and we keep U.S. cotton top of mind for brands and retailers all across the globe. And then profitability. We want to make sure that on farm, you guys as growers are profitable. And this is an area that can be focused on in many departments that Cotton Incorporated, all program areas. We want to make sure that profitability is very important and something that we always focus on at Cotton Incorporated. And then contamination. This has been a priority area for many years, but we always want to make sure that we're working to address this threat of contamination in U.S. cotton and that we're working to address that. I'm going to share this quick graph with you so you can see where that 2022 budget, the $87 million, how it's broken down by the different departments at Cotton Incorporated. Of course, a large chunk goes into consumer marketing, and that's just inherent to the cost of media spending and media buy. It's expensive to put ads online, to put ads in TV, to put ads in print, to create that collateral, and then you'll see the next biggest department, the global supply chain marketing. And that is great. We want to make sure that, we're, again, creating that space and that market share for U.S. cotton. You can see the other departments fall behind there. The next thing I want to talk about is some new results that we have from the Cotton Board. So every 5 years, we conduct independent economic analysis. We want to determine what the effectiveness of the research and promotion program are. We really focus on quantitative results and analysis. This is third-party, peer-reviewed, and these results are measured over 2 different time periods. One is short-term, so just the last 4 to 5 years, 2015 to 2019. And then one is also long-term, so since 1986. And we really want to focus on this to see what essentially is the ROI back to growers and importers into the program. You can see here a few bullet points. We've just completed this independent economic effectiveness survey, and we're really, really excited to share these results. Increased demand, increased U.S. and world prices of upland cotton, increased revenue. We've really seen some enhanced yields, expanded acreage, lower inputs needed per acre of cotton that's yielded. It really has reduced those real costs for growers per acre to produce the cotton. And then, of course, lastly, cotton seed and cottonseed oil. We've really worked to increase the demand and the value of the cottonseed and the cottonseed oil. These are some numbers that I really want to focus on specifically that came out of this particular study. So the cotton fiber demand is 15% higher, and that equates to 2.74 million bales per year. And that's great. That's really such a wonderful number that we're excited to continue to show that increased demand, even since the last couple of economic evaluations we've done. One of the biggest numbers that I really want to make sure growers understand is their ROI. So for every dollar a grower invests in the research and promotion program, they get a return of $6.50 back on the value of their program. So this is really exciting to know. We are a partner for you guys as cotton growers and cotton importers, but we really want to enhance your investment. And I think that the research and promotion program has done that. The staff and the team at Cotton Incorporated is very dedicated and really experts in their field on what they're doing on your behalf. We've also reduced production costs by $7.60 per acre on average. And this has come out with research. This has come out with, studies that have done on, what you can do with your water, with your input costs, per acre. So these are some really exciting numbers that we were really excited to share and get back in this economic results. So like I said, we have two other economic results that we've done previously. Both of these reports are on our Cotton Board website. And really both of them, all three of them now, actually, they've had very consistent results. So we're excited to share that the program is generating dollars for stakeholders. I really encourage you to go on our webpage. I'll show you where it is on our website here in just a little bit. So you can see these numbers, and kind of dive deep into that report if it's something that you're interested in. In that same vein, our stakeholder communication piece of the Cotton Research and Promotion Program is really such a huge element of making sure that you guys understand what we're doing with your assessment dollars and encouraging you to understand, what those ROIs are for you. So we have closed out, or we have one more producer tour this year, a Women in Ag trip coming up in about 3 weeks to Cotton Incorporated in North Carolina. But we're really excited to get back to normal from our COVID pause. 2023, we have our regular tours scheduled February, March, and June. Our February and March tour are husbands and wives, men and women that work on the farm, stakeholder offices, partner offices, and then our June is our traditional Women in Ag tour. So sorry, no guys allowed, just women that work on the farm, in offices, and in partner offices as well. We also continue to stay active on social media. If you don't follow us there, I'd encourage you to do that. And that's one space where we've really started pushing out some of these economic evaluation results. Back in a few calls that we've had, I've shared some of these digital marketing bursts that we've done before, but we've released a couple of new digital marketing bursts online, specifically targeted at these economic evaluation results. You can view these on our webpage, on our YouTube channel, but we're also using them in the online advertising space. So you'll see them on social media, but it's a way to take some of these numbers from that economic evaluation that we've done some quick bursts. They're really interesting. So I'd really encourage you to watch these on our webpage. And then lastly, we have our Cotton and Coffee series that we're continuing through this year. We just had one yesterday where we were visited by Dr. Jesse Daystar, the Chief Sustainability Officer at Cotton Incorporated, talked to us about sustainability in the cotton world, kind of what that looks like for growers, what that looks like for importers, what consumers are saying, what consumers are demanding, and the great message that U.S. Cotton has to share. Our next Cotton and Coffee is coming up June 21st, where we're going to focus on planting seed quality and cottonseed oil health benefits. This will be really interesting for you guys. I know down in South Texas, historically over the last few years, there's been some issues with planting seed quality, like there has been in other parts of the Cotton Belt. But this will be a really great opportunity for you to hear from Dr. Galen Morgan, Dr. Evie Chacones with Cotton Incorporated, to hear some of the work that they're doing on planting seed quality and cottonseed oil health benefits. So if you have not joined one of our Cotton and Coffees before, shoot me an email or shoot me a text and I'll send you over the link to join. But hope to see you on June 21st at 7:30 a.m. Central. And lastly, I'm going to share where that stakeholder transparency, where those economic evaluation results are on our webpage. So you see here a screen grab of the cottonboard.org webpage under the About section, under our stakeholder transparency. You'll be able to view our annual reports there, as well as these economic evaluation results. So I'd really encourage you to visit that page, take a deep dive into those economic results, and please let us know if you have any questions We want to make sure that everyone, can view those, can kind of understand what they're about. And it's really a huge piece of our stakeholder transparency. So with that, I will turn it back over to you, Bobby. My phone number is there on the screen. If you guys have any questions, please feel free to give me a call or shoot me an email, and I'd be happy to answer those questions.
Thank you, Christy. Really appreciate you sharing that information. That's some very, very good information to be able to disseminate out to producers in the industry. So greatly appreciate you sharing that with us this morning. Matt, do you have anything that you want to add or share?
No, sir. Thank y'all all for participating this morning.
Christy, I have one question. Don't mean to put you on the spot, but is there work being done to where if I wanted to go to the local grocery store and buy a quart or a gallon of cottonseed oil that becomes a little more available to consumers in the store?
There, yes and no. I mean, the work actually to create that market, if you will, to put that in the grocery store is a little bit outside of Cotton Incorporated's purview. However, the work that we're doing that we hope companies will adapt is sharing those health benefits of cottonseed oil. And, if a company knows the health benefits of using this oil, then they're going to want to bottle and make that oil available for consumers at the store. So it's kind of a two-part thing that we're looking at. We as the research and promotion program can't create that company that bottles and sells the oil or ask companies to bottle and sell oil. But what we can do is provide the information on how great of a cooking oil, the health benefits, the cooking benefits that cottonseed oil provides, and encourage the use of that in everyday diets and everyday households. And with that, we're hoping that these companies will start to have it more readily available. We've seen a little bit of I'm going to say kind of a block in that part of the supply chain, that there's just not excess oil a lot of times. A lot of the crushing and the seed and the oil markets, they kind of use everything that's in that space. But with Dr. Evie Jacones, we're really putting she just started with Cotton Incorporated last fall, and we're really hoping that this kind of health benefit side really takes off over this coming year. And so hopefully that will address that concern, Bobby. We hope so.
Great. Just a curiosity. I know you can order it in gallons off of Amazon and you can find it different places. I just have noticed you just really have a hard time finding it in a grocery store. So just curious. Thank you very much again for the great information, Dr. Welch. Again, thanks for being on with us this morning, and look forward to our next month's meeting. With that, if Matt doesn't have anything, well, I guess we'll sign off. Y'all
All right.
have a good day.
Take care.
Good to be with y'all this morning.
Thank y'all very much. Have a good day.
Thank you.